Hello and welcome everyone. Today we'll be looking at a classic trading strategy that is quite popular among traders, and whether you're a beginner or a trader that is maturing and coming of age, as traders we are quite guilty of overcomplicating our trading sometimes, and there are a lot of different approaches, ICT, SMC, like social, like smart money concepts, and all these different approaches, and none of them are right or wrong, but it can get quite tribal trading. Like everybody has their own systems, and you know yeah, they have their own terms, but most of the time you'll find that they are classic old school strategies like this one packaged into something fancy. So let's dive straight into it. So here I have a example of SCI. This is like an altcoin, and you can see on the daily, yeah, it's looking pretty good. Obviously, hindsight is 2020. So right now, I'm going to be the best trader ever to live. But we will try to see if we can see a setup somewhere using the strategy. So today, I'm going to be talking about the 10-20 EMA strategy. Usually works a lot better on the higher time frame. And if I think if you used it on a higher time frame, you would outperform most people with all their with all their ICT, smart money, all this other kind of I'm not saying that they don't work. Everybody does what works for them, but yeah, obviously this is not financial advice, but they are, they have, you have a lot of like decision fatigue, and a lot of subjective signals whether they occurred or not, so there's a lot of a lot of discretion in those things, and you will find that like in a lot of things in life, you know some of the simple things are often the most effective. So yeah, let's dive right into the strategy. um, so it's basically a you know yeah, you will have a slower moving average and a faster moving average, which is like an average of the last x number of bars, whatever we take. In this case, we'll be looking at the EMA 10, EMA 20, and maybe also an EMA 50, just because like it is quite popular for traders to use that. Now the basic concept is whenever, so as you can see, here is a 10, 20, and the 50. And as you can see, the basic concept with any kind of EMA, not exactly fussing over the exact values, is like when the shorter term moving average crosses over the longer term moving average, then we say, yeah, that it is a bullish cross or a golden cross, and we are looking for buys, and we say that, yeah, the trend is up until it is not, which is when the shorter term moving average crosses below the longer term moving average, and then we say, yeah, okay, that is a bearish cross or a death cross, and it's a bearish signal. Usually you want to look at a you want to look at sell signals at that point. Maybe you want to sell the market at that point, and of course there are nuances to that. So yeah, let's dive into the example. So you can see here, we have a cross. We also have the 50 EMA, right, for filtering out the noise, because as you can see, we would say that the trend has not truly reversed until the 50 is broken. And there's a lot of evidence that this does work. As you can see, we never really touched the 50, only about here we touched the 50 for the first time, and we bounced off it quite hard. And then yeah, we broke through the 50, and then you can see this is like the kind of like a lot of chop around this, and usually you can see that it is a deteriorating uptrend. And yeah, it was clear after this one. You see that once it crosses below the 50, the 10 and the 20, they cross here, and then they cross below the 50. So this is your death cross. And at this stage, whenever there was a retest of the old support that broke into resistance, whenever we went into that area, we continued to sell off for quite some time. Maybe just once did we clear the 50, and all the other times we just faked out. And you can see that we still haven't, okay, maybe we closed above it here, here, but the 10 and the 20 did not cross. And when they did here, then yeah, we have a strong move here. Like, let's see how much this is. Like, this is like a good 60-70% move. Now obviously I wouldn't have gone till that long, maybe I would have maybe taken some profits here, like 20%. I think ideally I would have got out here, just my style. So yeah, in this case you would have made a sizable profit. And yeah, this works on a lot of assets, so if I were to go on some other example, INJ. Okay, this is the weekly, here's the weekly chart, and I mean the daily chart. You can also look at the weekly, and you can see that it works probably even better on the weekly. Here you can see that there is a cross, but okay, we will say that we are waiting for the 50 cross as well, and you can see here there is a clear cross, and we establish support. Now if we were to put out a trade idea based on this, that was the first time that we are retesting that, and then it's pretty clear that yeah, it's quite a wide trade. So you personally, I never take setups with such a wide stop. I mean, so yeah, I mean it's not easy to get on this one. But yeah, once it closes above, maybe you have a stop below one of these lows, or you're kind of in tune. After this, you're waiting for a better setup. Maybe you want to then dive into the daily, and you want to look at maybe you want to enter somewhere here. Maybe you're waiting for a cross above, okay, you got a cross above here. I mean, yeah, because you're working on such a high time frame, sometimes you have to, and the profit margins can be huge, and you can sometimes you need a few attempts to really get on that stock, because you're not going to nail a 50, whatever, you're not going to nail a setup with 50% as your stop loss. But the concept remains that if you were to look for setups, the moment the 50 crosses under the 10 and the 20, 10 20, this is your cross. Now from this point on, you are looking to buy the market, and as it develops for a longer horizon trade, and as soon as this gets over, right now you can see that it is gotten over. So till the time that it clears this area, I wouldn't be buying it just yet, because yeah, I mean, maybe I get the bottom here of that sort, but it could very well just unwind here straight down, maybe it goes down to these lows, and I cannot afford a 30%, I cannot move a 30% move. So I would rather wait for a better setup, maybe on the daily, something yeah, it goes above here, spikes above, and then it clears maybe this, and I enter somewhere here with the invalidation being here. Yeah, maybe I take a couple of attempts. But if it were to reverse, as you can see that, yeah, we are having a series of yeah, it's just chopping around. So right now the trend direction is not clear, but we will wait for it. We will wait for that clear trend change, something around here, and yeah, that's basically in a nutshell what we are looking at. And yeah, if you would like to check out anything else, let me know. Cheers.